What's up, everybody? Welcome back to another Mario Lawfal Crypto Daily. We've got an incredible panel lined up today. We're talking about what's going on in the market, but also the ability to be your own bank. Is it only just tied directly to Bitcoin? Are there other aspects out there? What also is going on with, the landscape of news right now surrounding crypto? We don't even want to get into it politically because, holy moly, there's just a never-ending flood of nonstop news stories to figure out what the heck's going on. But we did see Trump and Xi Jinping apparently concluded their trade talks. So we're still looking forward to hearing what came out of that. But we've got, as I said, a great panel lined up. We got Solnick on as today's sponsor. We're going to be diving in with an AMA at the last 20-30 minutes of the show. So stick around for that. I love these sponsored shows because we have the ability to meet with these devs of different projects and really get to that peek under the hood of what these different companies and businesses and protocols are doing out there. So with that being said, again, welcome to another Mario Lawfal Crypto Daily. My name's Kelly Kellum. Mr. Drew, how you doing?
I'm in danger, Kelly. I'm long in Bitcoin when we're freaking pretty well above $100,000. It is what it is. I'm in a tornado of sorts. I can hear it outside. So double danger here. But, really, I'm just been following this thesis that we've developed on, the market wasn't over when we fell down to 75K. And now I'm seeing a couple double-digit days for altcoins. It feels like we're on the cusp of things really starting to heat up, and I'm very excited for it. You mentioned a lot of news that's happened. DeFi getting the license to party from the SEC yesterday. So seeing that, very, very exciting, and playing into why we see some of these DeFi protocols really making moves, and it feels very fulfilling to me to see DeFi finally get this nod from the SEC, the new chair, Paul Atkins, over there. And it's not surprising, I wouldn't say, because Paul Atkins is very connected to crypto, but we got a green light, folks, and it's about to get real fun. That's what I think.
Yeah, I couldn't even believe it. The shift that we've seen in the last 12 months, but really the last 6 months, really starting a little bit before that with when now President Trump was President Trump-elect. The shift that started to take place nearly immediately. And then it kind of came to a culmination yesterday with the new chairman of the SEC, Paul Atkins, saying so much as, we're essentially not going to let DeFi go off the rails, but we're going to make sure that DeFi isn't regulated away. We're basically giving it this stamp of approval. We want to make sure this is integrated into the U.S. Finance, and then also help maintain our standing as the leader of global finance. But again, we got a wonderful panel lined up today. Let's throw it around the room. So, Sergio, how are you doing today? Thank you for being here.
I'm great. I'm happy to be here. I'm excited to hear about you guys' project and how everything's going.
All right on, my friend. And then we got Yaboyski. How you doing, my friend? I know you're there in Nashville. Are you perplexed with this these rainy clouds right now, or are you just simmering in the green candles?
I'm just simmering in the green candles. It feels great. I know last time we talked, I think it was April 18th, and we talked a lot about Wyckoff, so it feels good to be simmering in these green candles now.
We did. I remember that. I think it was you and I don't know if you were on that one, Drew, but it might have been me and Pulse. I'm not sure who it was, but I remember we were talking about the setup. It does get a little bit contentious in your own mind sometime when the market and everybody on crypto Twitter is yelling, it's crashing, it's done. And we're out there boldly saying, no, guys, this is looking like a setup for higher. You feel like a moon boy, and then it pumps higher. You're like, okay, God, thank God. You
gotta dance on your hill, though. Because you're taking a hard-sided stance on where one of the most volatile asset classes on the planet is going to go to on a public platform.
I know, right? And then you have the people that give the one-word sort of troll responses, okay, and then they never respond once it actually plays out. But you know what? It's playing out in my portfolio. It's playing out in everybody that's watching here on Roundtable Space on the Mario Lawfal channels, because we try to keep you ahead of what's going on so you can navigate this market. But we also got Solnick here. How you doing, my friend? It's good to have you back.
Thank you. It's good to be here. I'm doing very well. Thanks.
Well, Drew, what direction do you think we should take this conversation? Because it feels like, I'm sure you and I both have our own shows. And one of the challenging things I'm finding myself each morning now is looking through 47 pages of different directions you could take every show from the news,
right,
to figure out. So what's on your mind about what's going on in the market right now?
Yeah, I mean, the first thing I was looking at this morning was how, the assets under management for BlackRock's Bitcoin ETF have hit 70 million faster than, or I think it's actually, it's like 70 billion or 70 million. They've hit these levels faster than any other ETF before in market history. So the velocity of Wall Street's appetite for crypto is showing to be more ferocious than it even was for gold ETFs in 2004. Um, and we're very used to these 4-year cycles in Bitcoin just from the halving process and kind of the finite supply of Bitcoin being cut in half every single 4 years. So it kind of gave us this mathematical metric to use and to trade around. And my biggest fear here is an 8-year bull market where up only is max pain. That is kind of the thing that I'm thinking about because it took, from 2004 when that gold ETF got released, it took 8 years for gold to calm down. Now we're seeing a better release velocity on Bitcoin ETFs than we did gold in terms of institutional interest. We just got Paul Atkins giving you the license to party to DeFi, and Bitcoin is the ground. And when we went to Bitcoin Vegas, Kelly, every single major asset manager, I mean, the talk of the town was taking loans against your Bitcoin and holding on to that. Now they have like this regulatory clarity to now take the loans out on their Bitcoin. It's kind of setting a whole new precedent. I don't know if it's, I guess maybe it's wrong for me to feel that because we're already positioned ahead of this major potential. But Kelly, I mean, for the average person, the retail is not paying attention. They're out there, getting wrapped around these civil unrest problems going on. They're emotionally invested in whatever political party's doing from day in and day out. And us crypto nerds were like sitting here like, yeah, let's party on a blockchain and financial level. But the world is asleep at this, Kelly. It's kind of a double-edged sword.
It's a double-edged sword. And one of the metrics I pulled up on my show this morning was looking at some basically just on-chain data, just broader data on Bitcoin specifically. The network activity is at a 1.5 year low, which if you look back, what was 1.5 years ago? 1.5 years ago, we were in the middle of, basically resetting the continuation of a massive bull trend. And generally when everybody's looking the other way, that's when the market rips. But what I find fascinating, I love to throw this over to Sergio. What I find fascinating is that we have the world's largest asset managers that are participating in the Bitcoin ecosystem now, and loosely in some small way also in ETH with these ETFs. But then beyond that, as you pointed out, Druth, there at Bitcoin, in Bitcoin Vegas, we had a number. I mean, I don't even know how many interviews, and every one of them came into the focal point of the interview was around Bitcoin DeFi. And that, and not to make this all about Bitcoin, but DeFi is a hot topic on the town right now. And stablecoins obviously have made enormous strides in terms of how they are integrated, not only in crypto, but how they're probably going to be the largest bridge to the sort of Web 2 or legacy sort of world that we, it's probably going to be one of the largest drivers of adoption of any crypto that we have is the use of stablecoins and the integration. So question for you, Sergio, is this. We have banks now that have sort of gotten the regulatory go-ahead to build out. We saw a report yesterday, I think it was yesterday or this morning, roughly 60% of institutions are figuring out, in what way they basically building out for how they can integrate with crypto and utilize these things. Is DeFi going to be something in the near term, like sometime in the near future, a thing of the past? This is a direction I didn't think this was going. The reason I bring that up, because is DeFi going to get bastardized by implementations by banking to where you're actually doing centralized DeFi, or is DeFi also going to stand alone in its own niche class that you're always going to be able to be outside of the system?
No, I think what the banks are going to be able to do is that they're going to open up the market in a ways as like lowering the interest rates on the loans that we take out on Bitcoin. For a long time, we've been paying high interest rates from other companies like CoinRabbit, Binance, etc. Like 1 point monthly. Now, when the banks get involved, I think those interest rates are going to lower a lot, and that's going to open up the market for the next biggest step, which is DeFi, right? So we already have a big established crypto, which is Bitcoin, right? That's already established. We know it's there. Of course, what Ethereum is going to be able to do, or what is doing, is opening the doors for DeFi, for decentralized. But what these banks are coming in with these huge capitals, that what their main objective is to do loans, majority on the mortgage side, I think that's going to help a lot with them integrating with Bitcoin, because now you're going to be able to get loans on Bitcoin with a very low interest rate, and be able to attack, which I think is the biggest problem with getting loans with Bitcoin, is margin calls or liquidity calls. So I think that's going to grow a lot the industry, and push a lot the price on Bitcoin, because everyone wants to buy and hold, but you also eventually want to get access to that liquidity, right? I think the reason that the market of housings made so much millionaires in the past is because you're able to invest, have your money grow, but at the same time access that liquidity and invest it in other things, or even just for your day to day. So I think the banks getting involved, being able to access more liquidity through your Bitcoins or Ethereums or your crypto holdings with better interest rates, and at the same time, hopefully being able to manage what I think is the biggest problem, liquidity calls and margin calls, is going to open up the market and explode the price of Bitcoin in the future.
Absolutely. I love that answer. And Michael Oates, thanks for joining us here. Shout out to you.
No, thank you. Yeah,
absolutely. Hopefully you're doing well, man. I kind of wanted to, I see you're a founder of Hold Earn, and what we've seen in kind of a furtherance of this conversation is JP Morgan, a few years back, they were developing their own Onyx blockchain, but then more recently they've started to do some test transactions with native crypto setups, right? And so there seems to be some interaction with the existing ecosystem of crypto. But originally, JP Morgan wanted to build their own in-house product, a blockchain. Do you think that companies like JP Morgan are going to openly integrate with the likes of Aave, or are they going to just kind of dipping their toe into what native crypto truly is right now to get a good feel for how their own product should look like a few years from now? What do you think about that?
Integrate. I mean, I would think they would build their own thing instead of integrate with Aave. I mean, there's a lot of different platforms like Aave back in 2021, like Curve Finance, and I know we were talking earlier about like margin calls and access and liquidity in Bitcoin, but platforms like DeFi Tuna is working on permissionless supply borrow platforms. So you're able to take any token and you're able to create liquidity where you can provide that asset for collateral and remove it. And so I think that's going to be bigger in the space. Now, the margin call, the liquidity, the volatility, I don't think that really goes away, because it's all going to come down how much money's in it, that particular coin or token that's out there. But yeah, I think they would build their own, because then they can control the TVL, adjust it as they want, instead of just integrating something. They're big enough to do that. But I feel like in DeFi, with more platforms like DeFi Tuna, Solend that's out there, and several others where you can just create your own markets, I think those are going to become more prevalent as time goes on, and then people can specify whatever whatever LTV they want, because that's the thing with Aave, you're locked into their parameters. Whatever they say the LTV for AVAX, ETH, Bitcoin, how much you can take out for the collateral you're supplying, but maybe they want to add their own different parameters to their particular platform and have their own fee structure. But I feel like it's going to be more permissionless down the line, though. I think the founder of DeFi Tuna mentioned that they're working on that soon, and that's going to change the game a lot. When you could take any particular meme coin, set your own LTV, and then see who bites, who wants to give you money for this highly volatile token that may or may not have a long history.
You bring up a great point. I think we've become numb to the homogeny of banking. People will argue, is Wells Fargo better than JP Morgan, or is this better than Bank of America? It's basically all the same, with basically minute percentages of differences over multi-year timeframes. A checking account is a checking account, a mortgage is a mortgage. But with the DeFi sector, it's such a new sector. I mean, what you highlighted is brilliant, because we that have been in the market for 10 years or 7 years or even 5 years, you feel like you've grown to become an expert in some realms. And then you look a little deeper and realize there's no way you can be an expert in this market, because it changes so dramatically day over day and exponentially week over week. So I'd love to throw that to Yaboyski. You know, what DeFi looks like now, and with the intersection of AI getting deployed on mass scale so quickly, can we even have any idea what the landscape's going to look like? Let's say even in 2 years, let alone further out, because it feels like it's changing so much. Is it going to become standardized?
No, I don't think so. But what really excites me about DeFi is I don't think that there is a system in the world that exists where true free market capitalism exists. And to me, that's what DeFi, it empowers not only the people, but also the product speaks for itself. And whatever is the best product at the best rate is going to be the winner. And, you know, just something to think about, like the internet was created like 40 years ago. And just think about all the progress we made over the last 40 years. So to think that we're going to have everything figured out, you know, even 4 years from now, like I'm excited to see what developments come.
Absolutely. In the complexities of like the current system, I think Michael Saylor's been the best at highlighting the way to arbitrage this, you know, and find that outlook, you know, building the strategy stack. And Michael Saylor came out, he was kind of explaining how the strike and all the other derivatives within strategy and what the risk is of shorting MicroStrategy are. But he's talking about 100% of their Bitcoin strategy has debunked kind of this quantum computing FUD and show why AI is bullish to Bitcoin. You know, this is kind of a complex subject matter, but what I take from it is, you know, Michael Saylor was basically talking about they would never release quantum computing out into the open market because it would break all forms of encryption and kind of the ways that we have things secured right now. You know, but on the other hand, strategy has built out this massive bag of Bitcoin, like Blink.coin. I want to go to you. You know, do you look at MicroStrategy and this massive bag of Bitcoin as a risk to our ecosystem, or is he just in general helping the conversation make it over to Wall Street to pique their interest? What do you think about that?
Sorry, was that at me?
Yeah. That's
Yeah. No, I think it's positive for the space. I do think there's risks involved. I mean, it's like almost like when a micro cap has too many big whales in it, like there's a risk there. Hard to explain, I guess, you know, but with the quantum computing, I think that Bitcoin can stay ahead of that if it were ever to become a risk. I don't think it would be easy, but I don't feel like the quantum computing would be a immediate risk. I feel like that would be something that would be foreseen far enough out to where changes could be made to protect that.
Absolutely. You would hope so.
Yeah.
You would hope so. I'll send it back to Kelly here.
Yeah, no, on that note, I just wanted to share this graphic that it's funny to me that people even, I mean, it's great to look forward about the quantum impact on Bitcoin, but this is basically, let me zoom in on this a little bit. This is Bitcoin versus a bank. Like if we're having issues with Bitcoin being cracked, everything else has long since been cracked and everything is melted down. Everything's done. Every power grid, every banking system, every cell network, every password, every bit of the financial system is so exponentially in orders of magnitude broken because Bitcoin's level of, you know, SHA-256 security is so far beyond what we have in any other security measure that's out there. So I think the question is, what is the rest of the world going to do to deal with quantum? How can the rest of the world catch up to Bitcoin? And the question really therein is, what is your strategy to get more involved with Bitcoin? Because it's not only a hedge against your financial future being, you know, destitute and being printed away, or actually having an expanded you know, horizon and what you can do if you have Bitcoin in your holdings, but also what it means to protect yourself against bad government policy, what it means to protect yourself against being outside of the system and the way regulations have historically been. And in addition to that, just this is the new frontier. Blockchain is blockchain is the rails of this next revolution that we are already underway of. You know, the railroad brought in the Industrial Revolution, and from that we've built cities, we've built all the way up to where we've had, you know, computers developed and rails, high speed rails, flights. There's so much different stuff that's all been born out of the Industrial Revolution. Shit, even refrigerators, right? Those were developed because people were living away from areas of food. So what does it mean now that we have blockchain? I think one, all we can really do is integrate, whether it means in our own portfolio or build businesses on it. But then two, what does it mean? What does it look like looking out? Solnik, I see you have a contemplative face on there. Sergio, I mean, sorry about that. Sergio, you have a thought that tickle in your brain there. What's your thoughts on this revolution that we're in the middle of? How do we deal with this?
I think a lot about quantum computing, because if you just ask the simple question, can quantum computing eventually crack private keys? The answer is yes, right? So that's a big concern, especially for us that we're trying to create a decentralized reserve. It's a big concern. The thing is that you're completely right that central banks do have a easier code to break, but they are centralized, so they're able to optimize their systems much easier, right? And they can put quantum computing for their security much easier than we can as a decentralized ecosystem, right? So I do see that is a concern, but I feel like the big whales of Bitcoin, the big miners, where we have trillions of dollars already, are not going to let that pass very easily. We need to address this problem from now. We can't take it, let it go, and say eventually we're going to do it, eventually we're going to do it. I think we need to start attacking that problem now, because one of the great things of Bitcoin is that you do need a large a majority to do some optimization on the ecosystem. And because it's so big, it is kind of a problem that what gives it security, right? What Michael Saylor says it many times, that it's hard to optimize, and that's what makes it so secure. But this is an alert that we have, and I think we need to start attacking that sooner than later, because we do have that issue that it's going to be much harder for us to actually implement those optimization to the ecosystem.
Absolutely. Yeah, I had to throw the question out there. I mean, we're in this three-headed hydra moment in technological advancements, you know, where we have the House of Agricultural Committee today here in the US. They voted in a good bipartisan support for the Clarity Act, and we're getting more regulatory clarity for crypto assets. It's a digital asset Clarity Act, basically aiming to establish regulatory frameworks for digital assets and addressing the oversight for market certainty for crypto and blockchain sectors. So we see these legislators, they're kind of positioning and trying to build legal framework for the system to start interacting with it. And on the other hand, we have AI development moving at breakneck speed. And then you got quantum computer builders in the background, you know, so it's kind of this interesting time. You know, in watching this, you mentioned central banks. There's been a lot of contention about potentiality for, you know, Secretary Bessent, the Treasury Secretary, taking the job of the Federal Reserve Chair. And it looks like the White House has denied that. They're not looking to put Secretary Bessent in place of Jerome Powell. And really, you know, the contention with Jerome Powell is null and void, because the Federal Reserve of the United States kind of operates to its own tune of its own drum. It's not really, unless Congress flat out stops the existence of the Federal Reserve, there is really nothing else to talk about there. You know, I want to tell you, Yaboyski, we've seen Jerome Powell, he held interest rates, and the market's wondering why. Me and Kelly have been talking about the large amount of debt that needs to be refinanced at some point over the next year or two here. I mean, the U.S. has to refinance about, was it 7 to 10 trillion bucks, Kelly? Is that about where it's at?
I think it's the maturity on them is coming due at, I think it's around 9 trillion.
Yeah. So we have $9 trillion worth of debt to refinance. We have, you know, in terms of history, where we kept interest rates historically low for quite a bit of time, that's where the pressure comes in. Yaboyski, are we in crypto? Obviously, Bitcoin's just moving up in tandem with the M2 money supply. But for the rest of the ecosystem, do you think it's waiting, or Ethereum, all these other DeFi protocols? Is that Federal Reserve rate what you're looking out for to see the kind of the risk appetite come back and retail come back? Or what do you think the Federal Reserve's interest rate decisions this year will play on the altcoin sector?
Okay, I think that's a great question. So, me as a technical analyst, Wyckoff is my bread and butter. That's what I'm known for. The last podcast that we did was April 18th. I don't remember exactly what Bitcoin was, but I know April 7th it bottomed at 74. So it was maybe 80K, and we were talking about Wyckoff accumulation and how I thought we were going to go north of 100K, near 118K, just the last time that we talked. Okay. So what I do, my entire analysis, I analyze what are the institutions doing, because that to me is what Wyckoff really is just measuring in a technical sense, what are institutions doing? What is retail doing? What does retail feel? Because they're almost always wrong. And, maybe I'm wrong, but my analysis on retail right now is they are not in this game. And quietly, like Bitcoin just made an all-time high like a week ago. We're within spitting distance of an all-time high right now. And if you look at Google Trends, there is we're at bear market lows. Coinbase app rankings is in the 400s. And we know even in December, it was top 10. December of 24, it was top 10. And we know in 2021, it was top, it was number one. People say, well, what about Robinhood? Well, Robinhood's not top 300 either. So retail is not in this game at all, in my opinion. And quietly, we know this old flow. Some people say it's accurate. Some people say it's not. But the sort of money flow from Bitcoin to large caps to medium caps to small caps, quietly, what is happening right now, in my opinion, and we could see this from ETFs inflows and outflows, BlackRock has been selling a little bit of Bitcoin and they've been buying more Ethereum. And to me, that is the front running of the stock or the money flow system that we all know and love. And to me, very quietly, retail is not in this game, and they're not probably going to be in this game until we hit euphoria. And that's just how the cookie crumbles.
You know what? I'm excited about that. I see some people barking, they're almost like they're upset. Like they're expecting retail to already have been here. And I'm like, listen, every time retail really pours in heavy, tends to mark also the shifting of strong hands to weak hands. And you get a top heavy market that then tends to break down, pretty, especially in the crypto market, where you get those blow off tops, or you get the very weak price action that just topples over into start a pretty strong bearish trend. So I'm excited that retail's not here yet. But I'm more thrilled for any one of you that's out there listening right now, or anybody that's been tuned in at all to even one thing a week for the last several weeks, months, or even years, hopefully. Those of you that are tuned in, you are so far ahead. If you have $100 worth of Bitcoin, if you have $10 worth of Bitcoin, you are ahead of about 7 billion people on this planet. And it's just, I couldn't be more excited about where we're going, but I'd love to throw it back over to Michael. We all get exuberant. All of us here on this panel look at data. We've been in the markets for some time, and so there's a little bit more thicker skin to deal with some of the swings. But we have all these mechanisms now from DeFi. We have the simplicity. I mean, compared to what Bitcoin and the crypto market was doing in 2016, 2015, when I was getting in, it feels like back then you were like Will Smith on Enemy of the State. Just like, you're like, it felt very cryptographic. And now it's like Coinbase is a bank account. You attach it to your bank account, you auto transfer. You don't have to go and get into an advanced trading desk with, charts and lines like a lot of us do. The majority of people are probably going to get in through other mechanisms, ETFs, maybe the auto buy feature on Coinbase or Gemini. But where do you see adoption really coming in, Michael O's? Do you think people are going to come in to crypto like us crypto natives? Or do you think the large majority are going to end up, let's say in 5 years, a lot of people holding Bitcoin and crypto, but the large majority of them holding them through some sort of proxy or ETF or other bank controlled centralized access point?
Proxy, centralized exchanges. And a lot of that's due actually to human behavior and people just forgetting things. There's been so many stories of people losing their private keys or losing a hard drive, and people are busy in their daily lives. They're not going to have time to store a private key. My own brother, that's a finance person, took a long time just to get them a phantom wallet and understand that you should save your private key and not just write it down somewhere. I think the majority of adoption is just going to happen through these other simplistic onboarding mechanisms because people just simply don't have time to learn. They won't adapt. And the ones that are here that are, I guess you could say, like working, I guess you could say, like in the actual crypto world where we actually have our own private keys, we have access to our own money, you know, not your keys, not your crypto. I think that won't go away. But mass adoptions, I don't think it's going to happen that way. People just won't change, and they don't have time to. They got too much stuff they're worrying about to figure it out. So it's going to be the centralized exchanges that are going to bring most people into this game.
Mm-hmm. Absolutely. I completely agree with that. And that's me. I'm a self-custody maxi, but like what Michael says, it's completely true. And, you know, just as a, you know, salt in the wound, we're like, as you said, a spitting distance from all-time high in Bitcoin, and Taylor Swift is outdoing Bitcoin in terms of searches on Google currently right now. So, you know, that's the state of the world that we live in. And as we're talking here, Bitcoin is absolutely going ballistic. It looks like we're at $110,200 right now. And in about 25 minutes from now, Donald Trump is going to be speaking at the Fort Bragg location here in the United States. And there has been whispers from the likes of Howard Lutnick, the U.S. Commerce Secretary, saying that the trade talks with China have been ongoing from yesterday to today out in London between the United States and China in terms of potentially an even better trade deal. Talks have gone well so far. Yaboyski, what do you think? Are they going to come out and say, we're friends again, give a little hug, a little handshake, and the markets go ballistic from realizing that a trade war is off the table? What do you think, Yaboyski?
Yeah, so I'm a firm believer, you know, in the very minority, I would say, but show me the charts, I will tell you the news. And the news has a way of working itself out when the charts are supposed to do what they're supposed to do. So I think, you know, where the charts are at, I think that things are going to work themselves out. Trade deals are going to be happening. Lots of other countries are already coming to the table. And I think ultimately this is going to be a great thing for the entire world. And I would say a lot to the quantum computing thing too is I think the biggest risk for Bitcoin is just forking. But the biggest risk on the flip side that we are quickly going into with Russia, China, the United States, the first sort of big leg was institutions like BlackRock getting their Bitcoin. But the next wave perhaps could literally be a world war for Bitcoin and mining rights and all these other things, and starting to get an arms race with Bitcoin. And you think about what is the biggest risk of, like, oh, your banks are screwed and maybe they fork the network. But the flip side of that is the biggest risk is you are criminally underexposed to crypto when an arms race starts.
Mm. Absolutely. I don't want to be criminally underexposed. I am overexposed right now. I'm just going to admit it. I'm up 40% since we started talking. So I'll send it back to Kelly. I want to kind of hop over to the AMA section. Kelly, why don't you kick that off, man? Because I want to find out everything we can about this new project, SolLink.
No, absolutely. Again, I just want to shout out to everybody that's tuned in. Thank you for tuning into another Mario Lawfal Crypto Daily. We love having these panel discussions and then these AMA sections with our sponsors on these shows that basically help facilitate this with our IBC team that puts all these out. Just a quick shout out for the IBC team. Don't forget this company, IBC, has been around since 2017, working with some of the biggest projects, including many of the Binance Launchpad projects this year. Some of the biggest launches of the year. In fact, you could check the case studies over on the website. They also have a massive department working with the top AI agent platforms in Web 2 and Web 3. So if you'd like to jump up here, chat it up with us, join the panel as either one of the guests on the panel, or if you have a VC backed project, a meme token, an AI project, or a listed project, reach out. They're, IBC is some of the most active investors in the Web3 space and incubation, consulting, all those things. So definitely reach out to this account and somebody from our team will get with you. But with that being said, I'm going to pull up some screen shares so we can share the screen along with the AMA here. But we're here with SolNick today. We got SolNick here, and we also have Yaboyski, the SolNick dev. But just give us a quick elevator pitch, under 60-second elevator pitch. And I'm going to throw it over to Drew to ask the first couple of questions while I'm scrolling the screens while you guys are breaking it down.
Sure. So we are a meme project. Like many others, we're trying to throw a utility along with that. We've been running this project for over 18 months now, and started at about an $18,000 market cap, ran up to about a $10.1 million market cap, and currently sitting at about $4.8 million. We do have some dApps that are being developed currently, and we've got a few other projects that your boy Ski is working on just to help build our vision, which is, as mentioned earlier, be your own bank. We don't feel like people need to be billionaires. One of the things that people say in this space is you got to work for your bags. We want to switch that a little bit and teach people how to let their bags work for them.
Absolutely. Absolutely. This is an interesting approach. It's kind of like a, hybrid between like the meme culture and kind of the self-sovereignty ethos of crypto. What would you say is how does this be your own bank kind of philosophy empower individuals? Like, why would you say that's so important for people to take seriously?
Well, and Ski could probably talk on this more, but his community is counts on him for education. They learn from him. He's given solid advice, and being your own bank, just sort of, we're not trying to take over JP Morgan by any means, but we want to show people that with the right tools in place, they can do the same thing that billionaires are doing. They can borrow against their assets. They can stake their assets to earn money or earn assets, and letting their bags work for them. Absolutely.
I love it, man. When I talk about, other meme coins, I mean, the meme coin landscape is massive, so how does Solnick kind of differ from typical meme coins or kind of those short-term hype projects that are all based on kind of, funny moments in pop culture or, different things going on in crypto space? Like, how does it kind of differentiate itself?
You want me to take that, or you got that, Cliff?
Yeah, go ahead. Go ahead, Devin.
Okay. Well, I would say, first off, as a charts guy, I would say that the chart speaks for itself. 90+% of coins do not make it past 90 days, and we are 18 months in, and every bottom, not only has the highs been higher, but every bottom has more than doubled from the last. So you don't find projects 18 months in still making higher lows, still making higher highs. That doesn't exist. From not a real project. So there's more substance to what we are trying to build, what we're trying to do. And as far as the BYOB movement of like, why is it so important to me to be your own bank? And at least to educate people, maybe being your own bank isn't for everyone. Maybe it's a little bit too complicated, but at least have the education to know that, hey, this is a educated no for me rather than a I don't know no. That to me is unacceptable. And we are shooting a documentary, a full feature documentary called BYOB, which it goes over the 2008 financial crisis. And a lot of people know that, hey, 2008, that was the real estate crisis. Less people know that this is why Bitcoin was created in the first place. Even less people know, like, here's where big banks left these small Midwestern towns. And that's what I explore in the documentary is like, hey, here is what the big banks did to me, my family, and my hometown. Here's where they left us, and still in ruins to this day. And this is why it's so important to me for people, regular people, to have access to the same sort of tools that Wells Fargo, PayPal, all these others have, such as lending, borrowing, staking, liquidity mining, and everything else.
Very interesting. Kelly, also the next one to you. I like that. I like that old school mentality that you're bringing to the community.
Of course. I mean, especially taking it back all the way to, the 2000. It's so funny. Time has moved so fast all the way back to 2008. I remember when 2008 was the future, right? But time is moving fast. Blockchain's here. We've got things like Bitcoin and Ethereum and DeFi, but then also the meme coin market. And I agree with there's a lot of hesitation around the meme market, I think, initially from the blue chip people, not realizing that the hesitation or resistance to it is very similar to the resistance that Bitcoin faced against the banking system, right? And who's to say one meme coin or a meme, the niche of memes, can't also develop incredible utility in it as well. So I really like seeing that you guys do that. What sort of specific tools or what sort of other features is Solnick building to help users take control of their future beyond the staking or all these other things?
Well, so the staking is live right now, and we're about to upgrade that to V2, which you're going to be able to do instead of just 90 days, you're going to be able to do 180 days, 360 days, and 720 days. You're going to be able to lock it up for that long, and the longer you lock it up, the more APY you're going to earn. But the other things that we're developing right now as well are the stable coin, which is going to be backed by partially backed by Solnick. Some is going to be backed by Bitcoin, Solana, USDT, USDC, and that is going to help us utilize the other dApps that we're creating, which are the swap apps, the liquidity mining, the lending, the borrowing, all this other things, the same things that Elon Musk, how he bought Twitter. He didn't just go to a job and work his 401k and all this and that. No, he put up his assets, which were the Tesla stocks. He got a loan against that, collateralized that loan, and bought Twitter. And that's how that happened. And we're trying to have like, hey, regular people, you don't need to buy a boat with debt. Maybe put your money to work. And instead of working for your bags, have your bags work for you.
I love that. I mean, it's, you know, even as I've gone from my journey as an entrepreneur for the last 15 or 18 years, even when I talk about things that they seem second nature to me now, I'll talk to other people that are outside of, you know, living the entrepreneurial lifestyle, and they don't realize you can rent your car from yourself, from your business, you know, to yourself, to your, so for like my home office, you know, I take care of some of my rent. But also, you know, going back to DeFi, those things like, you know, protocols out there, like we talked about Aave earlier and Curve, things like Morpho, Moonwell. The funny thing is the large majority of retail, I think they have a better chance now of gaining education around these things, but the gamification of crypto, the gamified nature of it, I think is what's really starting to make people open their eyes to their financial future. So I'm going to take a little pivot here from the next question I wanted to ask you. I wanted to throw this over to Solnick and ask you, do you think there's going to be a pretty large divergence away? Because we've seen a huge amount of the pump and dump nature of meme coins. And I think a lot of people have their mind sort of siloed, and that's what memes are. But we're also seeing coins like Solnick out there building and integrating real utility. Do you think that sort of cross sort of gamification and the playful side of memes, but also utility now coming into memes, and what you guys are doing with Solnick, that can really take a decent sort of opportunity at market share, or at least access point for people to integrate and educate themselves in these opportunities?
Yeah, I think there's always going to be an audience for the pump.fun and the, you know, roulette table of, you know, it's gambling, straight up gambling, you know, and people are, and people have to go in and pay their stupid tax and learn that they're not going to make any money that way, or they might get lucky once and then they're going to think, you know, they figured out the game of crypto. But I definitely think that there will be a divergence towards trusted devs, teams that are consistent, teams that are docs, teams that show up and have, you know, a track record and still have a lot of room for growth. And I think that's what we're presenting is, you know, consistency over the last year and a half with still a lot of room for growth and a history of previous growth.
Absolutely.
Well, on that note, I wanted to just hop back in there because I think you just hit the nail on the head with on the dev side, but also you also mentioned this also, Yaboyski, and that is there was like this great meme culture where memes were doing like just generally doing really well because there are so few of them early on. And then Pump Fun came out, and now we have this over deployment of just the drowning, the dilution of the meme market. But then now I really think you guys can forge a clearer path for, you know, other meme coins in general, because by integrating real utility in what you're doing beyond it just being a playful, maybe quick profit play, also shows to the holders that there's development and some sustainability within the project itself, because you're building out things beyond it just being a price mechanism. But go ahead.
Oh, sorry. Oh, I agree with you 100%. And the reason why our dApps, I feel, are important to our project is it helps with stability of the chart. You know, as people are staking, you know, they're not selling. As people are growing interest in it and seeing their bags grow, they're more interested in buying more. But, you know, Devin's, or your boy Ski's community is what has helped build our project. We've got some great people in there, and they've been a part of it from the start. And it's you know, we had a lot of growth in the community early on, and it's still slowly growing. But having that as stability, I think, is our biggest strength for our project.
You guys mentioned, you know, some of the backing of Bitcoin and kind of diversified backing for the organization in general, but something beyond that is we see a lot of kind of aggressive other, you know, tokens or ecosystems popping off, like SWE. You got Solana, obviously, with everything that's been accomplished over there. Can you kind of dive into like what strategies Solnik is using to essentially make sure there's efficient liquidity across multiple chains? Like, kind of what steps you take to make sure it can really expand into the next hottest ecosystems that are popping up?
Yeah. So right now our main chain is Solana, and I would say probably 85% of our liquidity, 90% of our liquidity is on Solana, but we have bridged some of our tokens as well to AVAX, and we are also on Base, and we plan to continue to bridge into other chains as well. And we've also partnered with on-chain, and that's going to be, I think, to me, on-chain is a big deal of, you know, I want to call it like Uber to taxis, but they are definitely knocking on the door of innovations. And essentially what you're going to be able to do with Solnik is through on-chain, our partner, is you're going to be able to buy Solnik with as long as you have a Gmail account, you will be able to buy Solnik directly using Apple Pay, Google Pay, credit card, debit card. There's none of this like send it over here, swap it here, call your grandmother, turn around 3 times, stop, don't forget it, all this other stuff that it's very hard to buy new coins. So this is going to bring access to, you know, the on-ramping of on-chain. And I think that's going to be a big deal for Solnik.
Very
and then Mike, did you, I feel like you're kind of tied in with this a bit as well. Did you have anything further on that you'd like to add?
Yeah, I think projects going multi-chain is really the way to go. Personally, I'm not a chain maxi, and I know some people are, but there's so many communities that are on different blockchains. You know, Sol was like in highest demand for the last like year in regards to like projects that are underneath $100 million market cap. And recently there's been an insurgence in ETH projects now that ETH is back up again from like 1,400 market cap. But you have to be available everywhere if you can. You know, AVAX is really big ecosystem. Base is huge. You know, being on Solana, ETH, and maybe at some point too, or looking into the SUI environment, because there's a lot of people out there, and if they want to get involved in the project, but they don't understand or know how to use Sol, they don't know how to get a Phantom wallet, or maybe, you know, they don't know, on the other side, they don't know anything about EVM wallets like MetaMask. They might skip over the project if they can't quickly access it. So making the project multi-chain, going to Base, AVAX, and other chains that align, I think it's just a no-brainer and a good way to bring better adoption to the project long-term.
So on that note, I know we kind of probably hit some of this before, but I'd love to kind of recapture and expand on it a little bit. Back over to Solnik. What steps has Solnik taken to build trust, credibility with this ecosystem? Because there's so many different players out there, such a crowded market, and there's a lot of LARPs out there for sure. You know, I remember 2 years ago at crypto conferences, every coin booth that when you talk to them, they'd say, "We're solving the trilemma." It's like, okay, who solved it yet? Nobody. But what's Solnik specifically doing to build trust and credibility and sustainability? Really is the biggest question for a long-term play if somebody's you know, considering Solnik.
Sure. first and foremost, we show up. Devin's live 5 to 6 days a week. And it's not a shill space for Solnick when he's live. He's educating people on Wyckoff. He's going through different charts, and he talks about any token that anybody's interested in. Obviously that's a great intro for us when we do want to bring up Solnick. But the consistency of us showing up every day, we're in the Telegram, we're posting on X, we're doing what we're saying we're going to do. We had a pretty basic 2024 roadmap, and we checked all those boxes. Moving forward into 2025, we released another roadmap, and we are also on track with that, as far as meeting our milestones, and just doing what we're saying we're going to do, and no funny business. Just trying to be forthright with everything that we're trying to accomplish.
Mm-hmm. I mean, what you just mentioned there, staying active, when someone's in a new project, they invest in a new project, and then they see that the project hasn't posted in months. Happened,
That's scary.
It's an easy decision from that point. So staying involved, especially, I mean, we're above $100,000 in Bitcoin. Like, just because retail hasn't woken up does not mean you should stop building. But you mentioned some building out on the roadmaps. I want to get an idea of what listeners can be looking forward to. How can they get involved? Like, what call to action could you give listeners out there that are hearing what you're doing? They want to try to get involved, or at least just stay up to date with the project. What was the best call to action that we can give them so that they can get plugged in and kind of become part of the journey here?
Yeah. And if there's anything, any special call outs you want, any roadmap things that you got, special dates coming up as well.
Devin, you want to take that, or you want me to go?
Yeah, I'd say the biggest thing is the on-chain. That could be released literally any day now. So the ability to buy Solnick just using a Gmail account. Almost everyone has a Gmail account, and it automatically converts it into a wallet for you, just logging in with your Gmail, and it gives you a associated wallet. And so that makes things easier for your grandmother, like not having to write down her 16 keys and all the things that you can either have security or you can have convenience, and this kind of blends the two together. And so our goal is to, wherever you're at, because there's so much tribalism in cryptocurrency. It's Sui versus Solana, it's XRP maxis, it's Bitcoin maxis. There's so much tribalism in crypto. Our goal is to be wherever you're at, that's where we're going to be by when it's all said and done. So we're going to continue to develop, we're going to continue to push. And we talked about this last time. When I was when I went through selection with the 160th, just rolling through the mud, and all they want to see is when there's no light at the end of the tunnel, are you going to keep pushing forward? And I can say without a shadow of a doubt, everyone, myself and on this team, we are going to keep pushing forward regardless of what the obstacles are. We will find a way. And you can follow Solnick Coin on X. I'm mostly on YouTube at your boy Ski. I am on X as well. It's my last name, Gayeski. So that would be get plugged into the Telegram.
I love it. I love to hear that you're ex service as well. I'm ex Air Force myself. Got hurt and medically retired back in 2004. So I was one of those young guys that was showing up on base with the blue retired ID card at 20 years old. The guards are looking at me like, "Is this an anomaly?" It's like, "Yes, it is an anomaly." But I love seeing developers out there building in every different aspect of this market. But also, I love more than anything that there is a meme project out there that is bridging the gap beyond just saying, "Hey, this is a coin so some people can make some money," and it's mostly going to be top down, just the devs. No, this is, hey, you got a community. It seems you guys are actively building. You've built some legacy. I would consider it legacy. A year and a half in the meme market is legacy, in my opinion. But you're also bridging into utility and doing DeFi and staking and all these sorts of things, especially across multiple different chains. So I definitely commend you on that. I do want to again say I appreciate every one of the all the panelists that were on here as well, and everybody that's tuned in. We really do appreciate you. You can find more information on them at SOLNICCOIN. That's Solnick, just like you see in the top right corner there, solnickcoin.io. Again, that's solnickcoin.io. And then you can find them on their socials over on X at solnickcoin. I love it, by the way. It's so frustrating to me when we do a space with somebody and their handle is so different from the name that it is what it's like. How are people aren't going to remember that? So I love it. It's that easy, guys. At Solnick Coin, you can find more information on them and get activated. It seems like you guys got a great community as well. So I'm going to throw it back over to. Thank you very much for being our sponsor on today's show. I really enjoyed this conversation. But I'll throw it back over to Drew. Do you have any final thoughts, closing thoughts?
Yeah, I mean, it's just, we noted, we're so close to hitting all-time highs again, like literally as this show is happening. We're about 2 minutes out from even more chaos on the markets, but altcoins still haven't woken up. And this, in my opinion, has always been the best time to find new projects, find things that are kind of developing. And really what Solnick is trying to do is something that we need heavily in, the meme coin space. I mean, DeFi is a great outlook for it. From the nods we've gotten from the SEC, from the regulatory clarity, the Clarity Act that just got bipartisan support, it's never been so here to stay in terms of crypto. So when we see things like this, there's always a potential major opportunity. And that's why we go live. Me and Kelly work tirelessly every day. Yaboyski, Solnick, it sounds like you guys have been working pretty hard on it and staying focused. This is what it's all about. Just building tools for people to find that financial freedom while the plan to print continues, while the M2 money supply continues to expand. There is no stopping that beast. There's only bettering our own position, improving the lives for our families, and trying to set up some real wealth and outpace this crazy inflation that's going on. So I really appreciate everyone on this show. And with that being said, man, I'm going to go hang out with my kiddos and enjoy this chaotic speech from Fort Bragg with Donald Trump. It's about to get real crazy here on the charts. My long is in danger, but I'm hodling. The stop loss is in profit. We're safe. Don't worry, everyone. But I appreciate you guys. Thanks for coming on the show today.
Yeah, thank you, everybody. Thank you, Michael, also for your thoughts, and Sergio, Yaboyski, and then, of course, Solnick. Really appreciate it. Everybody that's tuned in, I do recommend, once this wraps up, go back to the beginning. We had a great, fruitful conversation the whole way through, talking about kind of where we're at in the market and what we're seeing going on, especially with what's going on with DeFi and what may be to come. So with that being said, everybody, thank you so much for being here, and thank you, Solnick, for being the sponsor of today's show.
I appreciate you guys.
Yeah, we will see. We'll see you guys again soon, I'm sure. And I'd love to watch the communities grow. Adios, everybody.
Thanks, guys.